Good morning, all, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and the global rebound continues with the futures doing what they're doing in the US. We're now looking at a 3-day rally or the third day of a move, likely as well. So the global setup from a bull's perspective, it looks pretty positive. US markets, what they did last night, I think pretty solid, pretty strong. Let me put it that way, even if not solid. So I think the moves were good, and you got to be appreciative of the fact that the rebound continues, despite the fact that it will be a holiday in the US markets tomorrow. So the global markets will be shut. But for now, the markets are entering the holiday weekend fairly positively. I would reckon the Asia and SGX Nifty too could be suggesting the similar things. I think the SGX Nifty, the last time I saw, was pointing towards, this is Asia, of course, and a tinge of green across. And the SGX was indicating a start of anywhere between 75 to 100 odd points in the green. So yeah, no surprises, exactly 100 points. So no surprises there. And this is something that all of us should anticipate back above 17,000. That's a story. That's a story in itself, isn't it? Now, what we did yesterday was interesting before we get to the trade setup. And the MOV function will show you how the market breadth was rock solid, 2.1% for the small cap index. That tells you how strongly the rebound and how widespread or wide the rebound is. Look at the losers. I mean, 4% or 5% was the top loser, which was TTML. And post that, everything else is 2.5%, 3%. Compare that to the gainers. And even if some of the names would be sketchy, some of the others, Century, Brigade, Bajaj Electricals, TCI Express, the gains are rock solid. So we certainly seeing a widespread rally, and with larger gains coming in for the mid caps and the small caps, which is always a good sign. Now, the trade setup, therefore, I would say it's the classic pattern, right? The classic pattern of small cap outperformance and falling volatility on day two of the bounce back. So this is a fairly classic pattern. But from a technical parlance, there is a higher bottom formation for the Nifty. And I think that may suggest that the uptrend wave may continue in the very short term. And right now, we are talking about the really short term. The focus starts shifting to what will happen from India Inc. in Q3 as well. And the early indications seem to be that the numbers might look good. I mean, somebody was telling me that the IIFL note today suggests that Divi's Lab may have a very strong rallied yesterday, and quarter three may be strong. So already people are talking about what will India Inc. deliver in quarter three. I think buying at lows is preferred with either the stronger sectors or value sectors. I think that's what everybody. चढ़ के माल लेने वाली market नहीं है, as they say. And why do I say, everybody must be wondering why I'm looking at real estate. Just look at the patterns that come into real estate stocks whenever the market shows a bit of a bounce. Like yesterday, Macrotech, Century Textiles, Prestige Estates. We had each of these names having a very strong bounce back. So these stocks Macrotech fell a bit, but the others tend to fall slightly less when the market is on a downtick. And when the upturn starts, they really bounce back very, very strongly. And which is why I was just saying, just look at any of the price charts. Century Textiles, for example, MOV showed you, right? Century, Brigade, all of these had such a sharp up move in trade yesterday. It just shows how the market seems to be wanting to lap up some of these. Remember the Knight Frank report day before yesterday suggested the kind of registrations in Mumbai, and which were at probably all-time high. And that tells you the kind of appetite that is there for real estate and thereby for the real estate stocks. FI selling marginally lower. Now, I don't think this is a beginning of a trend or anything. It's just one number, but I'm bringing to you. Yesterday, I was saying that FI selling is lower. It had come off from 2,500 crores to 1,120 odd crores. Today, it's sub 1,000 crores. I think a sub 1,000 crore number after a while. So, which is great. DIs continue to buy, but the FI selling number ebbing is actually a good sign as well. What are the stocks to watch in a scenario like this, therefore? I think that is what we should be looking at. So first, the big conundrum of yesterday, right? Zee Entertainment. And was it buy the rumor, sell the news? Was it the rights issue or whatever else that got the market a bit worried? The stock didn't rally at all. Multiple brokerages, very different views. I'm bringing you the CLSA view. I don't agree with the last line, but I'm bringing it to you in order to tell you the whole thing. Right? So they are maintaining a buy. A target price of 415, which is 5. They're saying the merger will require, of course, several approvals, including 75% of voting shareholders. And what Invesco has to say and do, Invesco Oppenheimer, that becomes a key thing. They're saying the company is still in litigation with the large minority shareholder, which carries associated risks. But if the deal goes through, then the valuation is likely to return to historical highs of 30p at 690. Now, that is debatable, viewers, right? I mean, media is a different kettle of fish right now. On a normal parlance, when Z used to trade at 30 times, I had to compulsorily be in a studio to talk to you. Right now, I'm sitting in front of a holiday home on my laptop and being able to do this. So media is a very different kettle of fish with digital doing what it is doing. So 30 times P, I don't know. CLSA guys are smart, of course, but I'm just bringing this to you the perspective that some of the others don't have such a bullish view. For example, cities moderately bullish. So let's wait and watch. This is what, of course, Z did over the last 3 days. And more importantly, as you see on 22nd December, kind of flat line. And in fact, started off lower. I may have started off with a bit of spark, but was trending lower for the better part of the early trade yesterday. So let's wait and watch what happens to Z Entertainment today. Larsen and Toubro, I mean, this is a big order win. L&T anyways has a very large order book for all the other businesses, but this is in the building construction business segment. They've gotten this large order win, 13.43 million square feet. That's huge. It is for the city of Bengaluru to develop a township, if I'm not wrong, because I think the order said some 39 towers and so many. I mean, whatever would have included the clubhouse, etc., etc., etc. But this is big. This is very big, even by L&T standards. They haven't revealed the name of the developer. A grapevine suggests. I mean, it's Bengaluru, so it has to be either Prestige or Embassy or one of those others. So let's wait and watch what the name is. Doesn't matter. let's just stick let's just stick with this. Sorry, viewers, I don't know if you missed me in between, but let's just try and stick to this. So L&T, the construction arm, has secured an order for about 13.43 million square feet of residential development. So that is, of course, I mentioned that. Indiabulls Real Estate, they've approved raising of about 1,500 crores via QIP. This is not good news. I mean, much as we thought that there's a merger out there, stronger balance sheet, etc. Here comes a fundraising. So maybe SARS the mood a little bit. So do watch out for this one. Watch out for JESCO or Great Eastern Shipping. They're going to consider a share buyback proposal on December 22nd. Clearly shows the confidence of the management in buying back the shares and returning some wealth to shareholders. So watch out for this one. Cineline, the small exhibitor, but they're going to re-enter the exhibition business via own properties to acquire additional properties on lease as well, because their various leave and license agreements with PVR are expiring in March 2022. So do watch out for Cineline. Do watch out for Jubilant Foodworks. I think there's a Morgan Stanley note which suggests that their channel checks suggest that Jubilant Foodworks has taken a 5 to 6% price hike. This should augur well for Jubilant. Don't be surprised if the stock is reacting positively. And last but not the least, viewers, I leave you with a note from Antique Stockbroking on oil marketing companies. They are reiterating the buy on OMCs, saying that HPCL remains their top pick. They say that the liquid fuel demand is likely to grow at least for this decade. Their blue sky scenario suggests that demand for oil, petrol and diesel might continue, or liquid fuel might continue well into 2040. So they are saying that this pessimism is unwarranted. The stocks, according to them, trade at very attractive 3.9 to 4.2 EV EBITDA for FY24 basis. And the supernormal petrol and diesel marketing margins are likely to largely compensate for the LPG under recoveries, which is a big concern for the markets. But I think Antique is saying that the valuations are very attractive. Their point is that BPCL, for example, the disinvestment premium is just 5% now, and which is pretty shocking. The only thing is BPCL has the highest return potential as per Antique, but HPCL is the top pick, and that's about a 60% uptick that they believe that the stock can get. So these are, of course, I mean, maybe what some of the stocks did. Net viewers, the rebound continues. Be careful when you trade, though. Try and stick to the stronger sectors. And if you're stepping out of your houses, please stay safe. Please stay masked up.